The so-called yen carry trade has been in the focus in the past few days, mainly as it is one of the main reasons to cause huge sell-off in Japanese, US as well as stock markets globally. So let's have a look at what yen carry trade is, what it means for the financial markets worldwide, and how does it impact NRI investors. So for 30 years, Japan has maintained zero interest rates. Not only on savings account, but even on loans, there is no interest at all. Now many organizations, funds, hedge funds took advantage of this by borrowing large amounts from the Japan and investing in US markets, as they had double benefits of zero interest money as well as dollar always appreciating against the yen. Now additionally, since the investment was substantial, most hedge funds also shorted the yen to hedge their positions. Now everything was going smoothly, people had been making free money for years, and this is why Japan is the largest investor in US markets, due to again the same zero interest money. So what changed? Last week, the Japanese central bank, similar to the RBI in India, decided to raise interest rate by 0.25% after almost 30 years. And from here, everything changed. Now zero interest money is no longer zero interest, and there is an additional cost to all existing loans. Hence, most of the funds that had taken this interest-free loan and invested in US market started selling off everything to get the money and closed the loans, mainly because the US market was already in a very overbought zone, and now these loans are no longer zero interest. 2 weeks ago, the Japanese yen was trading somewhere around 165 yen to $1. Now due to the increase in interest, the yen started appreciating against the dollar, reaching $1 equal to 145 yen, which is a whooping 13% gain in just a matter of 2 days. Now most of the people who shorted the yen had to cover their positions because the yen had appreciated significantly in just 2 days. Now imagine you took a loan in yen when it was $1 for 165 yen and invested in the US markets. Now suddenly $1 is 145 yens. So regardless of your returns, you have a direct cross currency loss of at least 13%, even if there's no interest. You have a direct loss of 13% due to the yen appreciating. So what does it mean for the financial markets worldwide? Let's try and understand. We have already started experiencing the repercussions of yen carry trade reversing. Nasdaq, which is a leading stock market index for large tech stocks, saw a fall of around 11%, and the Japanese stock market index Nikkei experienced a single day fall of around 16%. As far as Indian markets are concerned, it is not clear how much money has flown into India as a part of yen carry trades. Brokers have said that it would be safe to assume some carry trades would have happened involving Indian equities, which have been among the top performing markets worldwide in the recent years. According to NSDL data, the assets under the custody of Japanese foreign portfolio investors (FPIs) in Indian domestic equities till June was somewhere around 72 lakh crores. The highest till now is by US FPIs, which is in the range of 370 lakhs crore. Also, now there is no free money to be borrowed in Japan. It could cause a worry for some Indian companies which have borrowed in yen but have not been prepared against this sharp move in the currency. So what does it mean for NRIs? Given the global market uncertainties, I would like to NRIs the below 3 things. Number 1, if you have a lot of cash lying around in your bank in dollars, euros or dirhams, it would be the right time to hedge the currency risk and move a good chunk to India, as Indian rupee strengthening against the dollar is expected. Point number 2. Once money is moved to India, you can invest this money into fixed income instruments like debt mutual funds or NRI fixed deposits and take advantage of high rates currently available. You can lock in these rates as they are expected to reduce in the coming future years. Point number 3. The current situation also indicates a huge sell-off in US equity markets, and US economy along with other major economies are expected to enter into a long recession. The only promising and strong economy with good growth prospects is India. So you can make use of being an NRI and start diversifying your US equity investments into Indian equity investments. That's all for today. If you need help with investments, taxes, etc., you can schedule a free consultation with me through the link in the description. Thank you.